So, welcome everyone to another episode of our knowledge based podcast series. This time we have with us Tariq Hussain. So, Tariq is well known on Twitter for sharing data led insights on his Twitter profile. He also runs a weekly newsletter for investors called The Wrap. So, welcome, Tariq.
Thank you. Thank you for having me.
Yeah. So, before we begin, quick disclosures. So, Search Capital is a trade name, brand name used by me, Ankush Agrawal. I'm a SEBI registered individual research analyst. Nothing that we discuss in this podcast today should be considered as a recommendation. Tariq, if you want to put out some disclosure by your end.
Yeah, sure. So, I'm not SEBI registered, and obviously nothing I say is like recommendation. I may take some examples, and I have maybe have some positions in that, and I may exit anytime, so without notice.
Got it. So, Tariq, let's start from the beginning. Like, if you can share a bit on your background, like how you started in the market.
Sure. So, market specific background, like I was always interested. I grew up like my dad is a shoe business, so my upbringing was always like from a business background, and I got interested in that. And there were a couple like all businesses goes through ups and downs. So when I was like in my early teens, we were going through a down period, and that was kind of I got interested as to why suddenly when things like businesses go good and they have bad periods, and that kind of got me interested into the business world of things. So at that point of time I started looking at what a stock market was, how businesses work, and that was a very early interest. Um, cut to when I was going to college, that's when obviously I got interested in markets as well. I was doing my finance degree and was opting for CFA. So all of that kind of journey started. And it's been about like 12, 15 years now. So been through that. On the side, I also had an interest in data science, analytics, and machine learning and computers and programming. So kind of married all of that. And I always try to do my investing a bit from data led point of view. And so that's been my background. Full time in like majorly into investing in stocks is mostly around the last 6 years.
Last sector. Okay. Okay. So, can you talk a bit about like what was your initial experience like in the early days, like how you used to invest? Did you started with trading, then move to invest, or what were the some of the key initial experience that you know
Yeah.
sort of laid the path of how you became an investor now? Because obviously the initial experience is what lays the path for how investors grow.
Yeah. So before, like during the time of college, before I got into, so my first job was with Goldman Sachs. So at that point of time, I couldn't invest direct into equity. But before that, I was kind of doing it. And it was very traditional how you do it. Or you look at like you read Intelligent Investor and then you get
Oh,
fascinated with stuff. And then you go and try to pick everything that's good in a company. And it turns out like only Asian Paints and Reliance will kind of come through that, and they don't really grow that much if they don't are going through that period. So very traditional mistakes of how you kind of come up into the market. You try to do it the best possible way, but turns out like sometimes you have to think and predict and assess what the next 12 months will be rather than what the last 5 years were. So that was my first like into the area, and at that point that I was doing only like, oh, used to should only do blue chip and should only do large caps. Don't touch small caps and mid caps. They are like very risky. So that was my thought like when I started like in 18, 19 years of age. Um, After that, I also tried to do a little bit trading and technicals and stuff. And that point in time, I didn't know anything about it. But the good part that what worked for me was because this was in college and I had very little money, that's whatever few thousand you could save. That was in the market, and that was a learning period. After that, because I got into Goldman and I couldn't invest, it kind of worked out for me because I wasn't then kind of doing learning by trial and error. I got all my money was going into mutual funds and SIP. Very whatever from my salary, I would used to just kind of put it in SIP because that's the only thing I could kind of do. And I focused my time on learning via CFA, and that gave me like a very fixed and a robust kind of a way to learn stuff. Also, I was learning through blogs and on Twitter and reading through other people. So just by learning and observing rather than kind of participating, that whole period of 5, 6 years when I was at Goldman, and obviously Goldman has their own learning resources and stuff. That was a time period when I absorbed as much as I could while my capital was building through SIPs. So I was not taking direct investments, but mutual funds were doing it, and I got a decent return, like about 19% XIR. Axis was the one. I was invested in BlackRock, which became DSP. Then so it kind of SBI small cap. These were like the 3, 4 funds. So that kind of gave me decent returns, and I had a good enough capital. So when I left Goldman, then also I kind of got lucky because I left Goldman at Feb 2028, Feb 2020, and
Okay.
that point, and I thought, okay, now I'll invest in the market. I can invest in the market. I don't have to do just mutual funds. So I liquidated everything I could in the month of Feb, not knowing that next 2 weeks later,
Yeah.
there will be the biggest crash in the recent history. And that point of time, then I started deploying it. And because I got a very good, that whole 2 week period, I kind of missed out where I was not invested and then transitioning to funds.
Right.
That had led to a good enough returns on it. And then it's been again trial and error. It's not like when I entered in 2020, I picked up all multi-baggers and stuff. Even
Right.
though market was great, I had my fair share of mistakes that I can elaborate later on. But that's been basically the gist of my journey.
Right. Right. Right place, right time, I think.
Luck, it's all luck. I mean, if I
Right.
had just left 1 month later, it would have been a very different scenario.
So, Tariq, what was the initial days like? 2020 Feb you left. So March you would have started investing, right? So how
Yes.
were you investing then? Like, because obviously there would be an angle of fear also because the first time you were
Yeah.
investing on your own after a
Yeah.
long time, that too a substantial amount, and that too in a very difficult kind of market, right? Nobody
Yeah.
knew what was happening. So
Yeah.
what were some of the initial, say, kind of bets you took? What made you take that bet if you can tell that
Yeah.
initial couple of months?
Yeah. So initial parts of it was all fundamental based again. But this time I was not looking at just blue caps. I was looking at themes.
Okay.
And because in Goldman, I was kind of doing my own research. I used to read a lot. Like I came across this McKinsey report on specialty chemicals. I was
Okay.
researching on solar. So I started like even early on my blog. I was in 2020, 2021, I was writing about solar theme and stuff. It hadn't really picked up. The interest in solar led me to the power theme as well. So it kind of just worked out, and it's been a lucky market as well that most of the themes that hadn't worked out in the last 10, 15 years kind of started working out. So the way I invested was looking at themes and companies in that. So one of the few ones I picked was Dixon. Adani Green I picked up just because it was quite cheap at that point of time, and they were building the India's largest solar park. And then
Right.
I got out of it much early. Then I didn't write the entire uh, multi-bagger run there. Then Dixon was a good enough one. I also picked up Bandhan Bank, for example, on the downside, if I give you things that were
Mhm.
wrong, just because I thought should have a bank in my portfolio. Again, the things that people have to unlearn. So I had
Yeah.
to still unlearn a lot of it. But those divis I picked up, and this all I was listening and reading a lot before, and that kind of helped me. And obviously, the market was kind of great. You could find anything you threw your money on, you kind of made money in a
All
year's
right.
time. Yeah.
Yeah. Yeah. So now almost 5 years since then. So like if someone were to ask you how you invest now, like what is it that works for you? What is the broad framework of your investing now? If you can talk about it.
Yeah. Sure. So I'll give you a couple bit more background of how things have evolved since then.
Yeah, yeah,
So
that would.
yeah, so 2021, it was all doing great. I was still like running just screener and kind of investing and just reading con calls, annual reports, and kind of just doing that. And it worked out great. It was good market. I picked up some good stocks as well. But to give you an example, like even in solar, I was early. I was writing about it. I didn't make the biggest amount of money, and all the stocks. There were a lot of stocks that gave a lot of better returns than the ones that I picked up. So, and in 2022, when start of 2020, when the cycle ended, we kind of got through inflation and went down
Right.
till March 2023. That whole period was my insight onto two things. A, I didn't have a kind of a view of the entire market. For example, if I wanted to know the entire solar stocks or entire specialty chemical stocks or anything that maybe does build containers in India. Even though I knew like shipping at that point in time was a big problem, there was a company called Lancer Containers, which was building containers in India, and there was a huge shortage, and Lancer Containers did very well at that point of time. But it was completely off my radar because I didn't have a way to get a sense of the entire market. So
Right.
since then, it has been a journey of building systems that kind of track market and build me like I have applied a lot of my data skill sets to analytics skill sets to build these pipelines that give me insights and ideas from various different ways. So if something kind of breaks out price wise or volume wise, technically as well. So all of that comes to me. If something comes via insider trades, all of that I have insights on bulk and block deals, corporate announcements. So the first thing was to kind of figure out what are the good data sets in the market that throw
Okay.
ideas at you. Figure out a way to remove all as much noise as we can, not all, but the majority of it we can. And then figure the last part was to turn that into signals. So it's been a journey, it's been continuous then, but now my investing is mostly done based on what can be how companies are evolving. And I get through what I have built, at least I get more insights and I have a view on pretty much the entire market. So in the wrap, in whatever tools I have, they kind of analyze the entire market. And any given time, I can tell you what's happening in what company through the tools.
Okay. So this need to sort of have an overall view on the market, like being able to track everything, did that came from the reason that even though you were invested in a lot of good things, you were not able to catch the biggest winners of those things?
Biggest and the most, and I couldn't figure out the way when to get out. So when
Okay.
to sell and when to book profit is a major theme because, like I can give you an example how, for example, the Jan 22 when the market peaked out.
Yeah.
I didn't have a view as to how market was in Jan 22 versus how it was maybe on March 2023. Like March 20, you can figure out that okay things are cheap, but how cheap are they? Where are we
Okay.
on the entire market breadth, as to if are we at the very close, are we at the middle, are we at the top? So that thing kind of started, and then I learned about these concepts of market breadth. I built these concepts out, and now we have a very good sense. Like we obviously can't time the market to the exact day, but
Okay.
uh, at least reasonably close you can come to an area where I can be reasonably certain that if I put my money to work right now, maybe it won't perform in the next 3 months, but it won't go down
Okay.
by let's say 50%. Like market wouldn't crash. The probability of something crashing like is very low compared to maybe when markets are at peak.
Okay. Okay. So, in a broad sense, what you're saying is you want to track the entire market to the best extent as possible. Try to
Hmm.
figure out what is working, you know, tracking, say, a lot of data that you've talked about, be it insider trades, funds buying, promoter buying, whatever,
Yeah.
and try to make a portfolio out of what is looking the best based on the data that you have gathered.
Exactly. And also to so all the four questions like when to buy something, what to buy, when to
Right.
sell, and what price to sell at. All of those four, which is the most four main questions any investor takes, all of that is now via data with me. Like I'm also, and all of that is via like I'm trying to assess probabilities of things. For
Okay.
example, if an idea comes to me through one of my screens or scanning or whatever tools, I'm trying to figure out, like, say, a promoter is buying something. I'm
Okay.
not just blindly putting just because the promoter is buying, but at least I have an idea and an insight that, hey, in this company, promoter has been buying and they were not buying for the longest time. And if all
Okay.
the promoters, majority of the promoters in that theme are kind of buying, it kind of
Okay.
signals something to look into that theme. And an
Okay.
example I can give you is like railways.
Yes.
In October 2022, late around that time, um, all railway promoters are buying. Titagra promoter was buying, for example, which he hasn't bought. in the last 5, 6 years, he hadn't bought any shares in his company, but he started buying in bulks. Jupiter Wagons at that point of time was kind of promoters were trying to come into via reverse merger and stuff. And there were other promoter companies also that were trying to do that via insider buying. So that kind of is a signal. So it doesn't mean like I go and invest directly in
Right. Right.
rail systems and wagons. Um, I look into that theme and kind of otherwise, if I don't know that signal, I would never think of railway. I would be like, oh, railways is a set heavy industry. It
Right.
doesn't work. It has never worked. Why
Right.
should I look at it? So
Right.
that's been the thought process kind of a change.
Right. Right. So, Tariq, okay. So, in this four parts of the screening, buying, holding, and selling, how much now are you relying more on the data or the signal that the data is giving you? Screening obviously makes a perfect sense, right? The
Hmm.
example that you gave makes a perfect sense, and all the data can sort of indicate to you, okay, what is looking interesting, right? So, screening obviously a large part could be backed by this data and everything. In terms of buying, holding, and selling, where are you in your journey of being able to rely as much as possible on data and less and doing the probabilistic analysis that you're trying to do? Where are you in those three buckets now in terms of buying, holding, and selling?
Yeah, so all idea generation is via data right now. Like I don't go and hunt for ideas. In fact, I get so many at any point of time that I have a list that I have to kind of prioritize. Okay, these are my top 10 ones. So even if I has to switch something, I know where the next three will be to for me to
Okay.
switch. So all of data is like all idea generation is there. The way it works that I look at ideas and common themes. Like if for example, an insider buying is giving you a signal, then there's been a bulk and block deal, for example, there. If there's been some development in corporate filings or that can turn the company around, then then I look at that and I then start my detailed research work on it. So it's not just
Okay.
that, okay, data has given me that, and I go. I look at fundamental like stuff, okay, what can change in the company? So Shakti Pons, for example, I can give you is it got first Kusum order when it was like just starting to break out and it hadn't even break out on the price range. It got a first Kusum order, and that was kind of an insight that okay, uh, it's starting to win Kusum orders, and Kusum I kind of knew about from the solar angle that there was government was trying to do that, but the government was trying to do that since 2020. It was always on paper. Okay, we'll get this signal, we'll get like give the orders and stuff, but it never happened. But then they start getting it. And then I marry all of that research work. I look at like read con calls or read whatever I can, whatever data is available. I also look at technicals, for example, the charts. They also play a very good role in mind as to when I should enter something, when I should sell. So technicals play a lot of role in, I would say, 60% weightage towards technicals when it comes to selling, and about 40% in fundamentals. Uh, and in buying is like 70% fundamentals and 30% technical and stuff. But
Okay.
the idea generation is all through data.
Okay. So, what would be the say one two great signals according to you that gives you say the most number of ideas, so maybe the best outcomes for your investing have been driven by a certain kind of signal? Are there some one to top signals that you believe in your experience, whatever you have is uh, has the highest probability of ending up becoming winners? Are there some?
Yeah, so I would say the corporate announcements is one of them. Like
Okay.
if somebody wants to kind of build like and get very early signals, the best way to kind of do it is just build this daily habit of reading corporate announcements.
Okay.
And there's like every day there's like thousands of announcements filed, but there's a way to kind of reduce a lot of noise from it, like 90% of it. Like there are other services in the market. In RAP, we have a service, so we kind of reduce all that noise. So I get like almost on non earnings days. So earnings is obviously heavy time period,
Yeah.
but non earnings time period, like a month and a half, every day I get about like 150, 130 corporate announcements, which I read kind of through. And this daily habit of reading that kind of gives me a lot of insight because just somehow I know with like for example on charts I will have alerts kind of pinged at certain points on majority of the charts. And
Yeah.
then maybe I've read an announcement a week or two ago and then suddenly alert kind of pops up a week or two later, I know why is that the case? Why is that happening? So I don't have to kind of, the alert doesn't signal me, okay, then I need to go and do my research. I ought to know about it, why this is happening, and then I can do a little bit of my work and figure out if I want to enter there or not. But
Right.
corporate analysis is the biggest alpha anybody can make, and um, re- anybody should kind of build that habit to kind of read if they want to kind of do long-term investing.
Got it. Got it. So in this thing wherein say you're trying to sort look at the entire market, and obviously you're getting a lot of ideas that you're saying. So do you run a well diversified portfolio, or do you say it's still a limited number of say 15, 20 stocks? How do you do it?
It's always concentrated. Like I don't do a lot of diversification there. So when I say concentrated, it will be like about 80% of the portfolio will be anywhere between about, so it sometimes goes to 8 stocks, sometimes can even go to like 14, 15. But beyond
Okay.
that, I don't really exceed. And the rest 20% will be like in kind of 10 kind of stocks. So if there's a long tail of small allocations, those are just kind of to get in and out of stuff. It was not a really long term, like and for when I say long term, my time period is anywhere between a year to 3 years kind of a thing. It's not really like I don't 5, 10 years.
All right. Right. So then how do you differentiate? Like say obviously if your funnel at the top is so big, right? Right. And even if you do a lot of good filtering, there's still a large number of bets, right? That
Yeah.
might look good, interesting. And I think one of the things that would be really interesting if we can highlight is how do you handle the bias? Because I think personally, the biggest problem for investors in market is that your watch list is doing better than your own portfolio, right? In
Yeah.
your case, that would be a bigger problem because you're already tracking a lot of things that is happening. And the watch list is already bigger, right?
Yeah.
That is keep on updating every day, and then obviously that FOMO part kicks in, right? For someone might be, I might not be tracking the entire market the way you are doing. So maybe my FOMO factor is slightly lower than what you would be having.
Yeah.
So
Yeah.
so first, in terms of overall buying only with such high number of say not high, relatively higher number of ideas that you come across, how do you differentiate? And while at the time of holding also, how do you do it? Like when do you feel like okay, this I should replace, or because you're already getting these ideas, right? So is it more like if something better just comes, you're very okay with switching even if the existing idea is sort of working, or like you want to see it through?
Yeah, sure. So the switch factor, so the way is based on allocation and how much I believe is the runway ahead and what's my margin of safety. That's the three things that I kind of look at first. So for example, if I am able to get into something quite early on, and I let's say it's already sitting at a decent profit cushion. So my main goal right now is capital protection. It's always been capital protection, and then on top of that, the secondary goal is generating return. And I know that I don't want to generate the highest return in the market every year. I do, and that's not my goal. My goal is to kind of generate up to 25% at a very good place consistently. If I can do above 20 also, that's also fine. But I'm not, it's always been greater than that. But I am not looking to kind of generate 50% CAGR every single year, just because the higher you go, the higher the risk and higher the headache things and stuff you have to do. For me, for my wealth creation, that number between 20 to 25 is very suitable, and I'm comfortable with that. So that's the first goal. So I don't try to, if my existing holdings have enough of profit cushion and capital protection in it, I know that at a certain price, if I entered and the price is already up significant amount from there, and it cannot really kind of, um, in any worst case scenario, even if it kind of something goes wrong and it's down like 20, 30, 40%, if I am still kind of fine in my capital, I'm okay with it kind of at being at a large allocation there and being okay and not really switching it. And the technicals also play a good role in that. For example, I can give you very recently, like I have invested into Force Motors.
Yeah.
Now, Force Motors, if you want, I can show you charts and stuff. Will that help out?
Yeah,
I
yeah,
can tell you. Okay,
yeah,
so let me kind of just. Um, So I'll put disclaimers and stuff as well because SEBI has these rules. Uh, but let me share my screen. So I've sent you a request to share
Yeah.
screen. Right. Is my screen visible?
Yeah, it's visible.
Awesome. So this is an example. It's a very recent example. That's why I'm giving it to you. So, for example, this is a chart, force motors, right?
Yeah.
And I, I have a habit of also kind of screening all every single chart of every single company above 300 crores in market cap. Um,
Okay.
for like every single weekend, I kind of do that. So I
Okay.
literally
Just,
go.
just a thing over here, Tariq. So you said you screen every company's chart over 300 crore market cap every week.
Yes.
Right.
So
So
I
what are
have.
you looking for over here, like in chart?
So you will see I have these and all the companies kind of here uh,
Okay.
in various watch lists divided by
Mm.
market cap. What I'm looking for is patterns in charts. I'm looking
Okay.
for if a chart is in momentum, is entering momentum, has it bottomed out in terms of selling. Basically, what I'm looking for is a something is called stage two in place, which is like standwise teens signal, which basically means that the price is going up and
Okay.
is under. So I have basically a trading view indicator as well that I have built, which kind of tells me
Okay.
what the current stage was, previous stage was. Um,
Okay.
so what I basically do is I look at these charts and
Mm.
what I'm looking for is how the price is behaving. Uh, are volumes increasing? Is price kind of increasing, or has there will come a time at certain price? For example, you can see in force motors as well.
Right.
There is buying that's happening around here, and that this has been an area of support for a quite a long time. Like it kind of has this was a support area, it kind of reversed from here. Then it was
Okay.
you will see like these are all buying that's happening there.
Okay.
So what I was looking for is basically this trend line being broken in force, and this kind of broke out with a heavy amount of um, uh, price and as well as volume there. So this was like 1 week return of 15%, right?
Okay.
Now, this was 3rd March. In Force Motors, there was also an filing by the company, and I can show you that as well. Um, so just this. So for example, if I type Force Motors. So this was a corporate announcements which Force Motors got on 30th March about
Mm.
their Gurkha vehicle, and 5th January they got a very big order for ambulance.
Yeah.
So it was already in my radar through these orders because 2,500, 2,400 ambulance is not a small order.
Right.
Gurkha order hadn't come at that point of time. So I was monitoring it based on that, and when it kind of broke
Okay.
out, I kind of started building a small position here.
Okay.
When we and then price was obviously doing well. Then it was market was kind of this also kind of works because the market was not kind of doing that great,
Mm.
and this was the one of the few stocks that was showing strength. So
Got it.
that kind of also is one of the insights that you can kind of do because at that point of time, money in the market is chasing what
Yeah.
is absolutely certain rather than kind of just
Yeah.
getting in and out.
Right.
So this was the whole area where I kind of built my position, and since then it's been kind of good. Now this is an example of my core stock where if I
Okay.
have to build a position, there's very little loss for me, very little risk for me because if I build it here, there's like 15% kind of loss. So I
Okay.
can keep on allocating to it. And the way I increase my allocations is I again look at, for example, this yellow line is the 10-week EMA that
Okay.
tells me that the momentum is continuing going on.
Right.
And I'm already at like about 30-40% profit here. So I wouldn't exit this until it kind of breaks this 40-week EMA. So I have this rule that anything that kind of breaks this 40-week EMA, I get out of it, especially after the momentum has started. And I can give you an example of like Shakti pumps in this. This is something that has finished its momentum run. You would see that
Right.
around this area was the first time when it got its Kusum order, and then the
Okay.
price kind of did nothing. But you will see this red line. it has never really broken this red line, even today. But right now it's gone into consolidation in this area, and it's kind of become expensive as well. But this yellow line kind of hugged it and kind of kept on moving up. So technicals, that's why kind of 60%, 70% weight has towards my selling.
Okay.
Another example I can give is something that I am looking at recently is something called Yeshu Industries. Now, this is a perfect example there because this came into my radar via a recent bulk and block deal, and it's very recent. In fact, I have recently built positions in this, so disclosure there. So I can give you, for example, Malabar funds and stuff entered in this. In December they had a first
Small
filing that they
quantity.
will enter, and then recently they got the shares as well. The preference allocation happened. This was at 1900, so I marked it, for example, where Ashoka, White Oak, and Malabar. So you'll see it's kind of there. Note. Now, this is an example of a pattern where volatility is contracting. You will see every time when something falls, it kind of doesn't fall as much. So it kind of came into my radar through these two ways, technicals and bulk and block deals. And then I started researching there. So they have a plant in Pakanj, which has like almost, it's one of their biggest capex that they had done in a couple of years back. It's finally at 50% utilization. And if you kind of look at, for example, in their balance sheet and stuff, in their earnings, it will look absolutely dismal. Like if you try to screen this,
Obviously
it
this
will
won't come
never,
out.
never ever come in via screener. But the reason, if you try to dig deeper as to why somebody would invest in this or why a fund is interested, is basically if you look at, for example, their fixed assets, it has increased by almost 3x in the last year. That is all the capex towards Pakanj. And if you read their con calls, you will see that they also have large amount of inventory sitting on their books. And this inventory, the reason is that they are trying to get new clients onboarded, which are much bigger clients for their new facility. And those clients wanted to see a already done production from that plant for certain size, which is the reasoning what they have given in their con call about this. So there, as soon as my metric here is basically as soon as the utilization for that particular plant keeps increasing, the inventory should kind of go down. Your scalability should come up. Right now, your profits are depressed because you're paying huge amount of interest because all the capex was debt funded, and you're front loading your depreciation here. So because of which you're basically making no money. But it should kind of, as soon as that kind of returns to 90% utilization, which is the timeline guidance they've given for the next 3-4 quarters, in the next, like the end of FY26, they'll achieve that. This should be in a different kind of a very different return ratios and very different stuff. So that's how it came to my radar, and that's how I kind of built it. Now, I also look at exports data because this is primarily an exports company. So I can see via exports data if their utilization is actually increasing or not. Because if their exports are increasing, that means here the plant was running full capacity. So the exports, any additional stuff has to happen from this plant. So it has been increasing for the last 2-3 months. So that kind of gives me a certain sense and comfort that is there. And then I kind of do evaluation. It has margin of safety and stuff. It looks absolutely crazy that it's at 400 P, but earnings are depressed. But if you look at assets, it's trading at like 2 times its total assets. It's trading at about like, if everything kind of goes well, it's trading at about like forward sales, about 2x. Whereas there are other companies which lower margin than this, especially Camel, that are trading much, much higher. So it has given me like this margin of safety to some extent. Plus, there are other factors as well. For example, the float for this is cornered. There are only like 20 lakh shares. All the FIIs have entered more. So you will see FIIs have increased as well from 1.4% to 7%. And even in public, there are like out of 24%, at least 10% is kind of with funds. So that's why it doesn't really fall that much because there's literally no float available. And it's all cornered. And if it just needs a little bit spark, and that spark is that trigger kind of plays out. If it plays out, then it should do well. So these are examples where I can build a larger position
Okay.
without really having a lot of risk. And then kind of there's a lot less probability of this kind of crashing and a much higher probability of this doing well.
Got it. Got it. Got it. One thing over here. So say fund buying is a signal, promoter buying is a signal that I understand. In your experience, how much relevance will you give to promoter buying equally and promoter selling? Because nowadays in our market, promoter selling and say equity dilution is a very common thing. Almost everyone now and then are sort of promoter selling is a very normal. Like how retail investors sell, promoter are willing to sell. There's no more that thing that promoters want to control as much equity as possible. So in your
Yeah.
experience, how useful promoter buying as a signal is in terms of figuring out opportunities and that eventually works, right? Obviously, the signals are hundreds, but eventually what works, I think it's a small percentage of it, that. And
Yeah.
equally, how relevant promoter selling has been as a relevant sell signal, according to you.
Yeah. Sure. So just on this alone data, I don't make any. Like it has to combine with other data signals as well.
Yeah.
But for example, I can give you a sense like promoter selling has been going on for almost more than about 2 years now. It
Yeah.
stopped in the middle when market was crashing, and now as well it has picked up. But
Yeah.
as long as there's somebody to absorb that selling in the market, it's okay. From a broader market perspective, right now
Yeah.
mutual funds are all absorbing that
Yeah.
flows. So all the mutual fund cushion over 2 lakh crores and stuff is entering the market. Now, when it comes to, for example, if a stock has run up a lot and then a promoter is selling. So I can give you an example of like Sky Gold. Promoter has been selling very recently. And
Yeah.
if you look at Sky Gold, it is broken its 40-week EMA after a very big run. So this run started, it is about like 18x. And it has broken after that, went to consolidation. I can share screen again. I think it stopped sharing. Yeah.
Yeah.
So for example, like this is the entire run of Sky Gold,
Yeah.
16, 18x. Then it has gone into consolidation and broken it. If you see, I have an alert here
Yeah.
for about 289. If it breaks this, it'll kind of continue to fall down. There's will be like no cushion here available. I don't
Yeah.
have any positions in it, so no full disclosure there. And promoter, this entire green red candle is via promoter selling.
Hmm.
So promoter not only sold to mutual funds, it also kind of sold in open market as well. So that's
Right.
one example. Like it doesn't mean that the stock will crash, but promoter selling after a huge run up with specific kind of signals, technical signals, kind of breaking that, it has more, like I will not be more concerned about that compared to a promoter maybe selling. For example, Dixon promoter recently sold,
Yeah.
right? And it has broken its 40-week EMA again. Again, a big run up very recently and a very big run up since
Yeah.
2020. Um, and so these are examples that probably things won't happen. And then you kind of study the company as well. So it's always not just based on these high five signals. I get it. It's good to get ideas and know when, like if I'm, for example, I'm like, okay, electronic manufacturing market will do good. So I will enter into Dixon. All of this will prevent me from acting. So that's a mistake avoided. That also helps in capital protection and your CAGR and everything else.
Right.
So all of that comes into consideration. Cannot be just, I've always maintained, like I started with just fundamental investor and before that just like blue chip and screener and stuff. In this market, as the market progresses, you need to have multiple skill sets, and
Yeah.
all of this is multiple kind of different ways to figure out and improve your probability of something. So that's what I would say. Like on its own, promoter selling not so much, but
Okay.
combined with everything else, yeah.
Right. Got it. So, Tariq, I got a broad sense of how you invest and why you invest, and what works for you in terms of investing. Now, can you talk a bit about what doesn't work for you? Like, say, these are the type of business or these are the type of bets that you have tried that doesn't work for you, or in your experience, say, the probability of these kind of setups doesn't work. If you can talk about
Yeah.
some.
Yeah, so things that are complex don't really work for me. If I'm not able to understand something, even if it's great, it doesn't work. Um, just because, and even like technical stocks, like I have never participated or never had anything in my portfolio that has been the best performer for that entire year. Um,
Okay.
and there's been, I know about them, like I get them early via all the scanning, but I'm never able to invest in them just because I can't understand. There's a company, for example, IT Cons, and this was a kind of almost a bankrupt company.
Hmm.
Promoters put some money in here, and then if you see, been a big run up. It's basically an HR staffing company. It does
Okay.
contracts for other companies like Swiggy and stuff. They will lend you employees and stuff. But I was never able to invest in it just because I didn't understand it. For me, if I feel there's even a remote chance of my capital losing, I will not be able to invest in. So that's been a case that I can't do it. I can give you more examples. So, for examples, um, there's a lot of them. In fact, I keep passing them out. I can't think of more right now, but Q Powers very recently. Uh, it's
Okay.
just it has done very well. Came into my
Hmm.
radar through new listings. So if like in the wrap, we look at every week what new company got listed as well. But I can never invest in such expensive valuations. Whereas something like a Transrail, I was able to invest just because it's even though it's like it had come down to its IPO price. I wouldn't, and at that point of time, it was not a very bad proposition. Like my ability to lose capital in that was very small. Um, and it was on a valuation basis was also kind of cheap. The whole risk of Bangladesh contracts and stuff was at that valuation was didn't mean that much. So I was able to invest, but not kind of make a very large position. Um,
Hmm.
so that's been the case. Like it has to be very, very certain about capital protection, and
Okay.
that that kind of is a final filter that kind of says if something comes in goes.
Got it. Got it. Uh, okay. So, Tariq, now, what is one area that you're looking to improve the most? Say, what is one area wherein you are making the most mistakes in your investing and wherein you want to have the biggest improvement for yourself?
Yeah, so there are a couple of them. First is always execution. I'm always trying to improve the execution part of it. Just I like even though I'm identifying things early, I want to be able to kind of try to get in at the least possible risk still. Like I get in a little bit higher and I exit a little bit later. So it's always execution is a kind of a area that I'll keep improving. The
So,
other
say,
things yeah.
by execution, do you mean the speed at which you're able to, say, move a stock from initial signal to eventual research and buy, or it's just, say, smaller improvements in the overall framework?
Yeah, so for example, so framework as well, and like if you ask me 5 years down the line, if I have the same conversation, I'll have improved certain things in the framework that I'm mentioning today. So it's
Hmm.
always continuous improvement. So it's always like what I can improve. It's always speed of execution, the quality of execution as well. I still make mistakes. Not like I don't make mistakes. I still make plenty of mistakes. So from those mistakes, what I can learn and kind of do it. Very recently, like. In spin-offs also I still make a lot of mistakes. It still goes either way around. I can give you like NACL is a open offer that happened recently. I thought that it didn't warrant that much kind of a run, and Coromandel is kind of buying it, but it was quite cheap. Um,
Yeah.
and at that point of time, it had still had a lot of like there was downside was quite less even after the run. Um, so now it has obviously kind of run up way ahead. So that's kind of stuff I'm talking about. Like still, I miss a lot, and I'm not even though I get these signals early on. So that quality of execution, and then the second part is I'm improving the signals as well. So, for example, we like I can't read all con calls, but I
Hmm.
want to get whole analysis of all con calls, every single industry that does the con call. I also want industry level analysis of it. So obviously,
Hmm.
like I would love to read every single con call and drew my own insights of it, but it's practically impossible because there are like 1,200 con calls just this quarter. And
Mhm.
you can't read all 1,000. So I built
Right.
using data and analytics and AI, I built this, which kind of gives me summaries of it. And then we also
Mhm.
have industry level insights of it. So if I want to see what's happening in a chemicals industry, I can just select chemicals and I can get all the insights there. So these are the things I'm improving, and this is very brand new. I'm kind of adding it. One of the signals
Yeah.
from this I've got is basically recently chemical companies, all chemical companies have started guiding that price have stabilized. And you can check, I collaborated with like, looked at online separate chemical data as well. And this was all, those chemical prices have stopped falling. And all of them are guiding for improving margins in a year's time. And that's how Yasho came into my radar as well. That I
Mhm.
looked at Yasho's industry guidance is the highest. They have been guiding for a while though, so that's why I wanted to look at other data set that can prove that this time their guidance is correct. And that's where export data kind of came in. So it's always multitude of whatever I can verify and then kind of do. So that's what I mean, like quality of execution.
Right. Right. So Tariq, let's talk about rap. Like it's something that you started last year. Like so, if you give a brief about what eventually led you to start rap. Obviously, it would have been born out of your own screens and signals that you have built. But if you can give a brief of how you developed it and what's the whole vision going ahead with that.
Yes. So like I mentioned, like end of like June 2022, I was still bullish on the market when market
Yep.
was obviously ripe for correction. And I didn't know why it was ripe for correction. And then the whole sign of when should somebody get out and what where we are in the market. So this is basically what I built first for myself. This is just a
Okay.
very simple market breadth kind of overview. And I use this kind of chart, which is very simple metric of how many
Uh-huh.
stocks are trading above their 40-week EMAs across different market caps. And if
Okay.
you can see, like in January 2022, we were at the highest, like almost 90% of the market in any single market cap was trading at above this zone.
Right.
And that kind of, and this was all obviously done later. I did this in like late 2022, and I got a side, okay, why this market had much more probability of correcting here rather than market kind of have probability correcting here. So even very recently, like March 2023, this had started stopped falling, and even very recently, you would say I have like tweets
Mhm.
as well, where market like 10 days before I was able to kind of figure out that okay, there's I didn't know that 10 days later market will stop falling, but I knew that probability of something connecting another 20% was very low in Fed. So at that point of time, you can easily deploy cash and wherever you want to and
Okay.
still be reasonably certain that your capital is not going to deteriorate for a long time. It might go down 10% and not do anything for the next 6 months, but the 6 months after that will definitely do well. So that's the first product we kind of did. And then I
Okay.
also started reading a lot of announcements. So it's been about 2 years since the wrap. And if you see, like, the first thing that I started out, and it was initially I was just doing it for myself. I'll still majority do it for myself. But within this, we have a couple of things now. It has kind of become a whole, has a lot of stuff in it. So
Mhm.
first we have basically this kind of a report, which kind of happens weekly, and this is basically just your corporate announcements kind of listed in different categories. And
Okay.
I manually screen these corporate announcements after algorithm kind of removes all the noise from them for me. So let me just show you that. Yeah. So for
Okay.
example, like I'll first show you the announcements part. So these are all the announcements. It will tell you like what is capacity expansion, what is joint ventures, like within this,
Okay.
what is happening, who are winning what orders. And this is all done manually. Like I read every single announcement after an algorithm removes and read about 150, 200 every single day. Within from
Mhm.
that, I remove further noise. So this will never have any like noise because an algo is not doing it, a person is kind of doing it. So
Right.
this way I kind of knows what's happening in majority of the stocks up above 300 crores and even below that.
Okay.
Then After that, we have like a lot of tools in this, and all of these tools are based on, again, my needs of stuff. So we have something for insider trades. We have for daily announcements. This is the algorithm cut where algo screens announcements and removes all the noise from it. So for any given day, you can get a, like, for example, 24th, you can get like thousand out of 1,000 filings, it's selected 175 into various different. So if I just want to see new orders, I can just click on new orders and I can see every single new order. There's a AI summary as well. So I don't kind of need to read into too much detail. And very easily I can figure out what is going where. Then we have all the announcements that we kind of publish in the report. We collate as well, and we have it for about 2 years, 3 years now. So going back 3 years, if I, for example, type anything like force motors I showed you earlier, so I don't have to go to BSC and search out of all the noise and figure out, okay, what is important. I just get very easily here. And for any company, I can kind of do that. For any industry as well, I can do that. So if I want to see how many specialty chemical companies are doing, so I can do chemicals. Yeah, so within this, I can basically look at all specialty chemicals, for example. And within this, I can like figure out, if I look at capacity expansion, I can get a sense of which all companies doing capacity expansion where. And if this suddenly kind of picks up across the industry, I know that, okay, there's a theme in the industry. And then we have a lot more, like I mentioned earlier, I didn't know which solar companies, what all solar companies existed in the market. So we have something called a market map where I can do, like, for example, solar, and I'll get all solar companies, including EPC for solar and solar cells and solar production, anything to do with solar. And we have done this for entire market. So every single company in 2023, I just started allocating it manually. What is the industry? What is the sub industry for it? What is index? So I can get every single company. I can see what's their market cap, what's their EBITDA and stuff, all of that. And the problem with other tools has been always that they don't give you this, like, for example, they will tag solar into electrical equipment, but it doesn't make a lot of sense because there are 100 other companies in electrical equipment.
Right.
Very minutely, if I could kind of do that, that's what we did, and this was all long ago. Then stage two is all the stage two kind of stocks, what I talked about, how many stocks are in momentum. And for every single industry, I can see how the momentum is kind of done. So, for example, defense, you can kind of see its highest is never really pulled back. And these are all like a year old tools, and now we have built a lot of new ones. So one of the ones, like recent one, is sector rotation. So this kind of tells you what sector is leading. So again, like if I have to pick something new out of the entire market, where should I focus my energy on? Because opportunity cost is the highest that I can. So if I right now am starting to look at like microfinance, that will not give me any returns for the next probably 1 year until the issues get resolved. But for example, in this area, I can kind of figure out very easily. We have, for example, these custom index. So for adhesives, this is a market cap weighted index versus NSE 500, and can kind of agrochemicals, you can see, is kind of started outperforming. So for each industry, I can figure out amines has recently started outperforming. So today, in fact, today all amine companies did well. They're kind of doing well, and kind of get into that detail. So this kind of gives me signal, okay, that I need to probably spend some time on a mine, figure out why these companies are rising, because every single company in a mines is doing well, price wise. Then maybe it may not work out. Like they might be going on prices, but after my research, I might find that, hey, there's nothing really great happening there. Then we have on earnings analysis. So there's a lot I can keep going on, but earnings, you can kind of see for each industry what the earnings has been for each quarter. You have bulk and block deals. For each block deal, you can every day what bulk and block deal you can figure out. And this is the latest one, which is mutual funds. So for any single, like I can figure out for any company which fund is holding what, and I can figure out like what changes are companies making. So if I
Right.
want to figure out Parag Parikh Flexi Fund, I can figure out, okay, what are the new entries that the Parag Parikh has done in the latest quarter. I can also figure out which funds are adding what companies the maximum in that particular month. So, for example,
Right.
PNB Housing, Aditya Birla, KPR Mills, these are the biggest new additions for mutual funds, and this is the biggest removals from mutual funds. So,
Right.
lot, man. And I keep adding more
Yeah.
to it just because I would. That's what I'm talking about. Most of the heavy lifting should be done by data when it comes to idea generation
Right.
and
Right.
removing the noise. And then my work still can then, because I get a good amount of signals, I can
Yeah.
then use my time well and research them properly.
Right. So two things here, Tariq. First, is how do you see this evolve? Like, say 2 years down the line, what do you want that you think if it's there in rap that would be say phenomenal. Secondly, how do you see the role of AI in this? Because obviously there's a large discussion of how AI will impact investing and all that stuff. People have started doing it a bit. But in this kind of framework, at least on your screening part, all this data led stuff, I think it can play a lot more role than
Yes.
uh, say other parts of or other kind of investing that people are saying. So if you can
Yeah.
talk a bit about that.
Yeah. So if you see in our Concall tool and the industry analysis part, this is all
Okay.
AI generated. Um,
Hmm.
and for example, in specialty chemicals, it analyzed every single company in there. So let's see how many companies are there in specialty chemicals. So there are about 29 con calls that happen in specialty chemicals. So it
Hmm.
analyzes all single con calls for every single thing. And if I just read this, it takes me about like 5-10 minutes to read in detail. It talks about themes across all these 29 con calls. It doesn't mean that I don't go read a con call as well, but it tells me that out of 29, what are the three I need to read? And what are the common themes across? So I don't need to kind of read those 29 con calls complete end to end, all pages. I can already figure out what are the themes. And it also creates this kind of a table for me that tells me what the margin, what the guidance is. So every single one is talking about margin stabilizing and improvement. And that's how I know that combined with, if I combine it with price action, if I combine it with institutional activity, I know that some players probably will do well. And if not 6 months from now, at least a year from now, specialty chemicals, the bad part of specialty chemicals after COVID started, that should have probably ended. Um, so that's one. And within this, like how I see RAL kind of evolving. So I keep on adding. I don't have a clear picture. Like I didn't, I never intended it to become like a tool that others people can subscribe and can kind of do it. I just thought that I'll do it myself, but there was a need for it, and that's why like the pricing is super low. I don't really charge anything for it. It's what I charge just goes into towards maintenance and stuff. And how I see it evolving is basically eventually it will kind of become like AI cannot do everything. Like I have a
Yeah.
analytics and I use AI in my work and stuff. I don't see LLMs just that feed them data and they kind of tell you, okay, these three companies invest. There are a couple of reasons, like even if LLM tells you like it's a best LLM in the world, can write PhD papers and stuff, you will never be able to invest in it without doing and building your own conviction and knowing why you should kind of do it. Because it's like similar, like if you tell me to invest in some companies, unless I do my own reading and build my own conviction, I will not be able to hold that. If it tomorrow it drops 15-20%, because you have done the research, you will be fine. I will not be fine. So
Okay.
I don't
Understood.
expect LLMs even 10 years down the line, even if they're able to do everything, to kind of do invest on people's behalf. I do expect them like this to evolve to the sense where it can, like how we have used con calls to generate industry insights. There's
Yeah.
a lot of stuff that we can kind of do using LLM, that heavy lifting part of it will be evolved, and at some point app will kind of connect everything together. And that's just my own journey there. Like I want that to happen, and that's where my quality of execution thing, like the signal needs to keep on improving. The quality of that signal needs to keep improving, and that's where AI helps a lot.
Right.
So even in this, like you can read the themes common and stuff, but if you find a company that's good, I still, for example, Yasho Industries, I still went and looked at the con call and the presentation and did my own research. I didn't just rely on this to kind of do it. This was helpful in
Yeah.
telling me out of these 29, these are probably the three companies you need to look at. Within three, I can then pick one.
Right. And obviously, there's no say, shortcut to the final research. Obviously,
Yeah.
the initial tracking and everything can be expanded with the use of AI. Got it. Uh,
Exactly.
so Tariq, you have like you have a proper job that you do, investing that you do, and the app is obviously there. So if you can talk a bit about like how do you manage your time between these three? Are there some hacks in terms of time management that helps you do it well?
Sure. So there's no hacks as such. It's just I have very long days.
Okay.
I work 7 days a week, and I work like 12 hours every single day. So it's a very, very tough job. I don't really, um, the thing I can tell you, like when people ask me, I first thing I tell them is to be aware of where you're spending your time in the day, and what are some of the time sinks. There's a lot of time sinks everybody has, and by time sink I mean, for example, um, scrolling through Instagram or just looking at YouTube shorts. You,
Yeah.
these are and these today everybody is fighting for your attention. So X to YouTube to everybody knows that that scrolling through reels is addicting, and they are just pushing it forward for you. So that is one of the time sinks. There can be other time sinks as well. For example, um, like you might be uh, doing your dishes or you might be cooking for yourself, which is great. Like I have somebody that does that for me because I just feel I can pay somebody extra and kind of get that done and maybe get an hour in my day to kind of do something else, and that hour will have a better return on my time than just me kind of cooking and saving time. But if somebody likes cooking, then it's great for them. But just being aware of where you're spending time can cut out a lot of these time sinks. So, and just kind of the first thing anyone should do is just start noting down, probably for a week or 2 weeks, as to at the end of the day, if you just make a note, okay, where all you spent your time during the day. Um, and I mean, like everything, the whole 24 hours, you can find out patterns as to where probably you can cut down on and do stuff. So that's something.
Okay. Okay. One question that I always ask investors that I meet that are good at investing, but at the same time, they're not full time into investing. Someone like you who has a job, but you're still like seasoned investor. Is that why not go full time, right? You love markets, you're doing well in the markets, right? You want to do well, you want to keep on improving, right? So having extra time would obviously mean you can do more.
Yeah.
So in your case, like what has led you to not do it? What is, according to you, are some of the pros or cons that you might have considered while not going full time?
Yeah. Personally, for me, I can't speak for others, but for me, I love
Yeah.
my day job, what I
Okay.
do, and in the career wise. So it's interesting, and also for me, like at some point of time, I may transition to a full time in the next 2 3 years because at some point of time your network kind of reaches at a stage where day job doesn't make sense for you. Like nobody can pay you um,
Yeah.
an X amount of money beyond that. It doesn't work out for them and doesn't work out for you. So I always have this thing that at any given point of time, if my earnings from my day job are less than 5% of my portfolio, that doesn't make sense for me anymore to continue my day job. So I will quit that. But for now, I enjoy my day job, and that's why I kind of keep continuing in that area. And uh, it's also kind of works out because like it's not putting all your eggs in one basket kind of scenario. Like if
Hmm.
market goes down or stays down for a year and a half, like Jan 2022 to like we had the 18-month lull period, nothing
Yeah.
happened. You're still making some money from your day job, and you're still,
Mhm.
it's much more calm rather than a full-time person would kind of maybe, like if I
Mhm.
am full-time, I will get nervous that hey,
Yeah.
I've not made any money in the last 18 months. In fact, I've lost
Mhm.
it. So it kind of helps in that part.
Mhm. Got it. Got it. Got it. I think there are a lot of good learnings out of it. So, Tariq, in the end, with each of this podcast, what I wanted is that the listeners of yours should have one key takeaway. Typically, it's a idea, but I think in terms of idea, yeah, sure, you have talked about in detail. But what I wanted from you is, what is that one thing or one suggestion that you want to give to investors, something that has improved or has had immense impact on your investing outcome?
Yeah, so I would say is just keep improving yourself. Continue to investing is very hard work, and you would know you've been doing investing for a very long time. Like it's a humbling experience as well. You would think like even after all of this, I still make mistakes.
Yeah,
Even after putting so much work and stuff. And it's one thing I've learned that it's very hard, and there's luck involved in it. But you should not look for shortcuts. There's no shortcut to investing. You have to put in the work. You have to put in the grit there. You have to do your own research. Um, you have to build your conviction and then kind of do it. Otherwise, because there's money and emotions involved in it, it's very easy to kind of lose sleep over it and get stuff nervous and stuff. Um, so I would say if somebody is an active investor, they need to at least have 20 hours a week to put in there. If you don't have 20 hours a week, go with a research analyst or somebody you trust, or a mutual fund or index fund. And if you don't, and it also depends on what your is, where you are today in terms of your net worth versus where you want to be. If that journey is less than 15% requirement, just don't do any of it. Just go to an index fund, invest there. Don't kind of be like scratch your head and do kind of just continue doing SIP. Doesn't matter what market is doing. If you want
yeah,
between 15 to 20, then you can kind of do a little bit active investing. Still, mutual funds will kind of give you about anywhere between 18% kind of returns uh, if they are good mutual funds. And then there you can hire like a mutual fund advisor and stuff. If you want beyond that, then that's where active investing kind of comes into play. And you need to kind of give at least minimum 20 hours a week to kind of do it. If a lot of people don't have that time but still want to do active investing, it's not a good kind of a mix in that part.
mhm. Got it. Got it. Got it, Tariq. Thank you so much for doing it. I think there are a lot of interesting insights that came out of it.
Thank you so much for having me. It's always a pleasure to talk to you.